We are the Wells Group, and we know Durango. With our deep roots in the Plata County, we bring a level of service to our clients that is unsurpassed. We combine dedication to exceeding expectations, market leadership, and honesty to provide our clients with superior results. And we have one simple goal: to make sure you love where you live. The Wells Group, local expertise that goes beyond real estate.
Welcome, I'm Jack Llewellyn with the Durango Chamber of Commerce, and this is the 23rd annual Wells Group Real Estate Forecast. Thanks to John Wells and Bob Allen and all their hard work behind the scenes and all the energy for this year's update. So gentlemen, welcome. And John, would you like to introduce our sponsors?
Sure, I sure would, Jack. Thank you. And thanks for joining again this year. This year, we'd like to thank our sponsors. Couldn't do it without them, and we appreciate them. And that's Alpine Bank, Animas Mountain Mortgage, Bank Central, the Malone Team, Bank of Colorado, Bank of the San Juans, Mountain to Desert Mortgage, TBK Bank, and Draper and Kramer Mortgage, the Norm Phillips Team. Thanks again.
And obviously without their support, you wouldn't be able to put on the forecast. And again, this was the 23rd year. So I've been in Durango 41 years, and currently kind of the top of mind is with interest rates rising so much in the latter part of 2022, what is the impact on real estate market here in Southwest Colorado? Bob, what are you seeing?
Well, you know, Jack, the truth of the matter is inflation has gone up. And it's been probably since the 70s when we've had a serious inflation fight on our hands. And the Federal Reserve has been raising rates, and consequently, mortgage rates have been going up. The rise in mortgage rates has had an impact on the purchasing power for some folks in the local real estate market. A 1% rise in rates cuts that purchasing power by about 11%. Mm-hmm. The other issue in our local market is there's quite a few all-cash purchases. About 30-35% on average over time has been the number. But locally, the number of cash purchases for homes over $1 million is about 53%, which is a pretty big number. Mm-hmm.
You know, it's interesting because you hear the perception is a lot of the deals are cash. So that's interesting, 33% are cash purchases. You know, another thing that we hear almost every day in the news is what's the community doing about workforce housing. You know, there's even the legislatures are getting involved. There's House Bill 1190, which is affordable housing, first right of refusal. Chambers around the state are opposing this or asking them to modify how it's written. And then another one we do like is House Bill 1189, where employer assistance for the home purchase, and the employer then gets a tax credit up to $5,000. But locally here, Lisa Bloomquist Palmer is the Executive Director of the HomesFund. And let's hear what she has to say.
HomesFund is a nonprofit organization that supports affordable home ownership in Southwest Colorado. Our primary programs are our homebuyer education, housing counseling, and mortgage assistance programs, all of which help people to reach affordable and sustainable home ownership in Southwest Colorado. In addition to those programs, we also offer our manufactured and mobile home loan program that helps people to purchase difficult to finance manufactured and mobile homes. And we also work with our local governments to provide deed-restricted housing in our various communities. HomesFund offers homebuyer education classes monthly up at Fort Lewis College. HomesFund has recently expanded our mortgage assistance program. We now offer mortgage assistance loans of up to 25% of a home's purchase price, up to $125,000. That greatly helps cover the gap between low workforce wages and high home prices in Southwest Colorado, so that homeownership really is attainable for low and moderate income households. We also have a new program that's in tandem with Fort Lewis College, where we are offering special assistance for Fort Lewis employees that just launched in 2023. The deed restriction programs that HomesFund administers on behalf of local governments are to preserve specific housing units as permanently affordable housing. These deed-restricted units have various restrictions on them depending on the program and the municipality, but overall they are reduced in price and people who are only under certain income limits can purchase them, and they need to remain affordable into perpetuity.
So thank you, Lisa. And are the impacts of low unemployment and the lack of, labor shortages and, labor shortages, we hear it in the service industries, hotels, restaurants, retail businesses, even construction, is all of that impacting the perceived quality of life?
Absolutely. Our labor force has been pretty stable for about 5-6 years now. Hasn't changed a whole lot, which has impacted a lot of the businesses locally that need some folks to work for them. Are similar to the rest of the country, our unemployment rate's very low. So local employers, particularly in the education industry and the government, healthcare, retail, tourism, and leisure, they're all impacted by the lack of enough people to help them out.
The other thing, certainly, as Bob said, unemployment's very low in La Plata County, and it's been fairly flat for years. Now think about it. We have added businesses and enterprises in that time frame that have clearly had to hire people. So in essence, that's why we see the proverbial every other storefront with the help wanted sign. Doubletree Hotel should just put a permanent marquee out there saying,
right,
here's the bonus if you come to work for us. So we can see that just continue to impact the ability to run efficiently for local businesses.
There are definitely a lot of opportunities for people that are looking to work. Now what are you seeing countywide and also out in the rural counties, outside of all the municipalities or townships?
Yeah, well, let's start out with activity in the county. If you look at total sale dollar volume, it's been very strong for 3 years. I think everyone knows that the economy has been very strong, which is why the Fed has been forced to raise interest rates. Our economy locally is strong, but our sale dollar volume has been high. It's been above $1 billion here for 3 years. The supply is really the story. The supply is still very low. So very low supply, increased interest rates has kept that demand somewhat in check. And that demand has fallen a little bit, or the apparent fall in the last year is driven largely by a lack of supply, as it is nationwide, and the increase in interest rates. If you look at the long-term seasonal supply, this is since I've been in the business since 1986, the supply right now is as low as it's ever been, and it remains low. It hasn't really gone up a whole lot. We see some evidence recently that some supply may start to go back up, but that's been a problem. That's kept the number of sales in check. If you look at the number of sales on a monthly basis here, the number of transactions, you can see the seasonality as it goes up and down, and that's always been the case. And it's down a little bit here in January of 2023. That'll go back up. We know that'll go back up because seasonally it always does. January and February are typically the slowest. October, July, August, those are typically the fastest, strongest months of the year. If you look at the residential supply and demand out in the county in terms of condos and single family and townhomes, that number is also very low, and it's been tracking very low for 2 or 3 years now. And that's having an impact on the number of sales that are sold, number of properties that are sold. That low supply has kept the demand, it's choking the demand. And so that number is down a little bit here in 22. The median sales price, consequently, with a low supply, strong demand, that median sales price was up about 20% in 2022. That's a very strong rise, probably not sustainable.
And Bob, I think you've noticed this as well. If you look at San Juan County, New Mexico, Farmington, Aztec primarily, and Montezuma County, Cortez, they've had some very strong residential sales in the last 12, 16, 18 months. I believe we have some leakage, with the prices, the median prices that Bob just talked about, the lack of choices of some inventory. We've seen some leakage probably go to those communities, and people are commuting. So it's an impact that we have to keep an eye on. But if a less than half the price across the state
Right.
border, that's attractive to some of our residents. What do you think, Bob?
I absolutely agree with that. Farmington, New Mexico is currently one of the communities nationwide that's showing the strongest rate of appreciation. So that has to have some impact from us. Some of those folks that can't really afford to live up here are commuting from Farmington into Durango. Let's move to the city of Durango. That supply in town is really low. 31 homes for sale in December, and I just checked that today, and it's down to 23. And of those 23, 12 of them are under contract, so that means there's only 11 available homes for sale in the city of Durango. That's really low, and that's going to keep that demand, that apparent demand, the number of sales low. The single-family median home sales price in the city has also gone up quite a bit because of that supply and demand issue. I don't know how that supply issue changes a whole lot going forward. Townhomes, you see the same sort of factors. The supply is low, number of sales has come down a little bit, but that median sales price continues to rise because supply is low and demand is strong. We move over to the town of Bayfield, and it's the same picture. Their supply is low and their demand is high, and it's as strong as it's been for the last 4 years. The median home sales price in Bayfield, again, a reflection of supply and demand. Demand is strong, supply has been low, so those prices are rising in Bayfield as well. If we move on to the land sale activity, that land sale supply has really fallen a lot in the last 3 or 4 years. Surprisingly so, from my perspective. And there just isn't a lot of land available anymore. So that's keeping that, just like the rest of the story, that's keeping the apparent demand low, but there might be more buyers in the wings waiting to buy land, but they can't find something that's available to them. And that's probably the case with the economy being as strong as it is. If you look at land sales by price, and you look at the sales over the last 3 years, and then look at the listings, there's just nothing for sale below about $500,000. It's very limited, with one exception in that $200,000 to $300,000 price range, which is a lot of lots out by Dalton Ranch out in the valley that are just come on the market. There's, I don't know, 50, 60 of them, and that's going to help that price bracket a little bit. But overall, vacant land needs some new supply, and I don't see how that changes easily in the near future because we don't have a lot of infrastructure out in the county to help service vacant land.
You know, a couple things, and you're talking about, you know, with the Farmington and the feeder markets, census data, this goes back about a year ago, but I remember about 5,000 people commute into the area to work, and which then they take their paychecks back with them when they go back to where they're from. And then who was it that said they're not making more land?
That's Will Rogers, isn't it? Yes.
We talked about that before.
Yes.
Now, did you want to add anything,
Sure.
John?
Well, you know, Bob, if we just flash back not to the beginning of this forecast, but even 10, 15 years ago, the amount of vacant parcels, lots to build on, residential lots, was staggeringly high. In fact, the consumer had a pretty good selection, if you will, and we have experienced this now where somebody selects an area of the county that they like to live in, they may only have a few choices of home sites to acquire. And as Bob mentioned, the other part that's probably holding back additional rural residential development, lot development, is quite simply, of course, the cost of infrastructure. But if you're not close to central water and or sewer, the amount of money you're going to spend on extending those roads and utilities and the requirements for drilling wells these days is really an impact and increases substantially the cost for that rural land developer.
Well, it's so true. I mean, you hear about supply and demand, and that is something that truly lends itself to, you know, the equations and what we're talking about. Now, with the record, you know, high prices of residential real estate, are we seeing people still finding the area desirable and they're still moving here?
Absolutely, especially those folks from Texas. The Texas migrants, the feeder market from Texas has just about doubled here in the last 3 years from what it was all back in 2019. The rest of them are pretty stable. What's interesting about these folks from New Mexico, Arizona, and Texas is when you look at the luxury real estate market, these folks from those particular areas make up almost 35% from Texas. The number's almost 18% from Arizona, and maybe 10% from New Mexico. So they tend to be luxury market buyers. The Purgatory area has really benefited in the last 3 years from that trend, and it's been very strong. Their sale transactions have gone up quite a bit. Their condo and townhome sale prices have gone up 35%. Their single-family residential home sale prices have gone up 17% in the last year, and their sale volume remains really strong. The same is true in the Glacier Club, where those numbers have gone up quite a bit since 2019, and they've had a strong run for 3 years. Their total sale dollar volume in the last year was up over $100 million. That's significant. They had a record sales volume in 2022. Their average home sales price is up a staggering 93%. Their average townhome sale price is up 40%, and their average vacant land sales price was up 11%. So the Glacier Club has really done very well.
You know, you look at, as your question was, are we still going to have people move here with the prices, interest rates? And what we're seeing here at the Wells Group with the brokers here is that it's occurring, but at a slower pace than 21 and 22, which were anomalies, quite honestly. Post-COVID, low interest rates, the desire to move, partially because of COVID, to a healthier environment, be it our communities in Southwest Colorado versus metro areas. There's still that flow, but it certainly has changed. If you're coming here to seek employment, there's the difficulty, the number of jobs that are out there that are paying enough for those positions, and how that equates to qualifying to own a home. The other thing that I might share is what Bob just touched on. Those folks that come typically in the higher price ranges are retired or semi-retired. Some are importing their business. They can work from here and they stay here for half the year or so and then go back to wherever they're from. But those residents, by the way, aren't counted in the demographics, which Bob will touch on later. And so when we see population growth, that's year-round residents. And when we see a lot of this real estate being sold to second and vacation homeowners, that's not counting those individuals.
You know, and when talking about, the regarding population growth and migration, kind of two-part question. Are higher paying jobs, being created in the area, and are companies actually moving here? I know I've got my thoughts around that, and also is there growth of the existing companies, which I personally really like, because I call that, as it's coined, economic gardening, such as the Stone Ages, those types of businesses that started here and they grow. And I think personally that that's the type of growth that we want to see. But what are you seeing?
Population growth that continues. I think it would be stronger if we had available housing. I do believe if we build it, they will come. Durango continues to be, and La Plata County continues to be, a very desirable spot. People want to come here. And we just don't have enough housing for a lot of those folks. And if we had the housing to satisfy some of the job needs, I think that would help a lot.
Yes, the growth, and I like your term, Jack, and I'll say the growth of employment's really organic. That goes back to your economic gardening, organic being local. You already referenced Stone Age, great example, great company. You got IKAV, who took over BP, Amoco's assets, and they have good level pay scale. Agile Aerospace is great that we have an aerospace company in little Durango here, and they have employed, I think Bob said, over 70 people. So that's great. And then the Southern Youth Growth Fund has certain divisions that have good pay scale as well. But when you think about an enterprise trying to move their company here, not grow it here, but move it here, there's a lot of hurdles there with cost of living, cost of housing, certainly workforce that they need if it needs to be trained in a certain way. So I think we need to really focus on what you do already to help and grow those local enterprises.
I think it's also important to point out too, with our low cost, property taxes with residential, severance taxes from the oil and gas industry helps keep that down. And you compare property taxes, let's say, to Texas. I mean, you factor all that into a house payment. That's something I like to remind people that, when you calculate all that, make sure you're looking at that big picture. One thing that really became, popular during the pandemic was remote workers. Are those workers being called back to the office? What are you seeing with that trend?
That's probably a better question for John, but you read about remote workers getting called back all the time. From my perspective, we've had a certain number of remote workers and Lone Eagles for a long time. We've been a place where those folks want to live and work and play. And so there's been a lot of those folks that have lived here, and that attraction's not going to go away. It may go up and down in terms of the desirability and how many of them keep coming or have to get called back to the office. That's going to happen. I have no idea. I can't predict what's going to happen after this pandemic because I sure didn't know what was going to happen going into the pandemic.
Well, we know you predicted all the right things. So how about you, John? What are you seeing with the remote workers?
Well, Bob's on track there. I mean, we have the Lone Eagles. That's somebody, they can work anywhere they want, and they weren't pushed here by the pandemic. They've been coming here for a long time. I do think we'll see some shrinkage of people in the IT industry that got to move to a place that they chose to for lifestyle if they get called back for a number of days a week. I mean, kind of hard to go back to LA 2 days a week and fly back and forth to Durango, but we still see plenty of them sticky. I just talked to a broker this morning that has a friend, and she works for Google, and she unfortunately had to lay off a substantial number of people based on the directive that the company gave her, but she still lives and works here remotely, and she has a lot of staff that lives and works here remotely. So there's still a percentage that I think we are benefiting from. But here's another little anomaly. The tourism that increased because COVID, when COVID was finally somewhat over, or the riskiest part of COVID, we saw what happened with tourism nationally, and certainly in La Plata County. And what that, I noticed what that was, it was what I call new visitors. There's so many people that I've talked to up and down Main Street that said, this is our first time here. A higher proportion of those people. And then they like it enough, they keep coming back. So that adds to the existing base of tourists that like and come and visit here but haven't bought a second home, vacation home. Those are the buyers that will continue to feed our marketplace. And we just added thousands of them, if you will, over the last few years of visiting.
Well, and I think too, we led the state in hotel occupancy rates, and we were filling those, and like you say, they're coming, and that does help to stimulate the economy. What other local influence, along with tourism, the lodging, lodgers tax, and sales tax collections, and you throw in the airport employments with the passenger counts, and of course the oil and gas energy industry. How does that all play in?
Well, I still believe that tourism is the #1 industry in La Plata County and the city of Durango. I believe the train's critically important to downtown Durango and the city of Durango. I believe Purgatory has really come a long way in the last few years with the new owner, and it's critically important, and a lot of people don't realize that Mesa Verde does a lot more than both of those. And it's critically important. And last year, that number was up 1.3% for the total. The train and Purgatory both had record years last year. The motel, hotel, lodging industry has recovered since the pandemic. It's done quite well here in the last couple of years. It has a lot more competition from the vacation rentals. In town, there aren't as many because the city keeps that in check with a permit system, and I think they've only got like 125 permitted vacation rentals in town, but there's quite a lot more out in the county, maybe north of 1,000 or at least close to 1,000 or more. And those are having an impact on the lodging industry. The lodgers' tax collections in town went up considerably in 21 and 22, largely because of the increase in the tax rate from 2% to 5.5% in July of 2020. But if you look at the 21 to 22 increase, it was an increase of a substantial amount. That annual increase was normalized here for me by the City of Durango Finance Department. And then you can see how we recovered from 2020 and the pandemic went up substantially. And then last year it went up a little bit. And that's probably a little bit of inflation in there. So maybe last year was a little bit flatter than we think. And that will show up in the sales tax as well. The 2% sales tax collections have been going up healthy every year. That's one of the reasons I believe that downtown is the goose that laid the golden egg and how important it is. And those sales tax collections continue to set records almost on an annual basis. It went up substantially in 21 compared to 2020 because of the pandemic. And then it went up again in 22 for maybe a little bit of inflation there, so maybe it wasn't as strong as we think. But those things are very important. The Plata County Airport's been improving for several years. Had a little bit of an off year in 22 because it was shut down for 10 days in September of 22. And then according to Tony Vicari, the manager out there, he told me that airline seat capacity has went down in 2022 because of a pilot shortage. So he said that had an impact on the airport passengers coming in and out of that airport. That airport's going to improve. They're going to put $7 million into it this year, and then as far as I know, another $7 million into it next year. That's going to continue to improve, and that's going to continue to help some of those remote workers flying in and out of Durango. The energy industry had a little anomalous blip there back in January. They had some storage problems or some pipeline problems, and unfortunately the town of Ignacio suffered a little bit because they had a contract that they had to pay that was based on that number. I expect that number to revert back to the mean that you see nationally, so that number may come back down. But there's a lot of folks here in the Plata County that collect royalty income from their royalty checks in La Plata County from their mineral interests in La Plata County. Think about 10% of the folks, if we have 60 or 65 or whatever the number is, 1,000 folks, 6,000, 7,000 folks depend a little bit on that natural gas industry for their income. So it's very important still in La Plata County.
Absolutely, it is a big part of it. You mentioned with the airport, and I understand that they're bringing in higher capacity airplanes now. If it's the 318, I'm not sure which, I can't remember right off the top of my head, but the airplanes that they're bringing in, so we'll probably see that number continue to climb. We talked earlier about the supply and demand. Well, to increase the supply, we need more construction of homes. What are we seeing in the construction industry?
The construction industry is, first of all, it's been very expensive to build locally. And part of that was the cost of lumber during the pandemic real estate boom. That cost of lumber went up 300%. It's come back down, but it's probably sticky locally in the retail level to the downside. So it's probably not come down as quickly as perhaps the futures would point to. The other prices for manufactured building products such as TJI, joists and or foam remain high, and they're increasing according to the builders that I talked to. The other problem in the construction industry from my perspective is there aren't enough general contractors. The number of general contractors in private construction remains low. It's still 24% less than what it was during the Great Recession or prior to the Great Recession. Now what that means is there aren't a lot of contractors to bid on jobs to build on all those lots that those folks purchased rather in the last 3 or 4 years. So those guys have a backlog of 2 and 3 years, as we all know. The specialty trades have improved a little bit. Builders are telling me that it's gotten a little bit looser, a little bit easier to get local labor, but that's still well below where it was prior to the Great Recession, which is going to keep construction costs high. There just aren't enough workers. And those folks, quite frankly, have the same problem everyone else does. It's very hard for them to find housing. So that number, it's going to be hard for that number to go back up. If you ask me, this is probably the most important thing that you see and what the housing problem is in La Plata County. We've run a deficit in building permits and building units since 2008. And that's the case nationwide. We're not unique in that manner. But that's the problem. And one of the large issues here in the state of Colorado is the construction defects law, which has kept a lot of the contractors from building condominiums. In fact, I only know of one condominium project in the Plata County having been built in the last 10 years. They're just not doing it because the risks are high. They don't really want to do that. The residential building permits, single family in the county, they're down a little bit. They could be higher, but as John and I both alluded to the fact, without any infrastructure out there in the rural county, it's challenging to build more homes.
Absolutely.
Yeah, it's a, the statistics prove the problem we have. And as Bob said, and this is cliche in some areas, but not in this case, build it and they will come. There is the demand for housing. And it's, there's no silver bullet right now. Here's the interesting thing though. The new home construction cost is, I'll say virtually all-time high, right? Well, as those new homes are built and purchased, or if they're having a custom home built and purchased, the value of that home basically pulls the existing inventory with it. Why? Well, if you have a 20-year-old home and Bob has a brand new home and this is $1 million and you're down the street and yours was worth $500,000, reality is somebody's going to say a little remodeling and I've got a nice home in this neighborhood, they'll buy up. So we're going to see that pull up. As Bob said on the condo front, even in Denver, they're still avoiding building condominiums. In the Front Range, well, there's probably more lawyers there, quite honestly, that do these lawsuits. But, if we had condominium product for the last 10 years, because it's less expensive product, it's more entry level or workforce housing prices, it would have created a lot of housing, if you will, for the needs that we have, right, Bob?
Yeah, I think the lack of condominiums has had a big impact. Condominium ownership is one that's helped the country for a long time, but it's also high density. And one of the ways to answer some of the housing problems is density, because you can build more units that feed on the existing infrastructure, and they're not out in the rural part of the county or in the rural part of any part of the country where there's no infrastructure and you can't build that density. So I think that lack of condominium, that's a big deal.
Well, I think too is the baby boomers continue to age. They also don't want to take care of a lawn, they want to lock and leave and those types of things. Well, that product is definitely something that's needed. In our recent Eggs and Issues that the Chamber hosted in partnership with the Economic Alliance, it was brought up about Bayfield. And it seems like Bayfield is really shifting to fast track. How many units are they bringing on? They have 1,100, right? Am I correct in that number? What's going on in Bayfield?
Bayfield removed and got rid of one major step in their planning process. So as far as I can tell, now it's a one-step process to get projects approved in the town of Bayfield. They have about 890, almost 900 units in their pipeline, in their planning pipeline, and they only have 1,100 units total in the town of Bayfield. Now, that doesn't mean they're all going to get built this year, but Bayfield is being progressive and aggressive in terms of getting some new construction done, and hopefully that'll satisfy some of the housing need. As Nicole Killian said, it's not going to satisfy all the housing need. It's not going to satisfy all the workforce housing that we need, but more housing, more units is bound to bring costs down.
Yes, and in addition, Bayfield is also looking at higher density, which historically they've been more of a rural community, not rural, but certainly a lot more single-family product. And they're encouraging that. They also are reviewing and considering adding language in their planning process to approve ADUs, accessory dwelling units.
Bob mentioned the train earlier, and it's nice that we have the train
there
going
it goes.
by. Yeah. See, it's,
it's on cue.
Just on cue. Anything else with Bayfield either of you want to add?
Well, not to be left out, the city of Durango is trying to address the workforce housing issue too. They've got about 2,000 units in the pipeline. Again, they may not all get built right away, but they're trying to address the problem as well. The single-family building permits in the city of Durango were down substantially in 2021, and you've sort of seen a decline in that single-family product locally since 2017. That's largely because of the lack of single-family lots in town. There's a couple big subdivisions at Twin Buttes and Three Springs, and Three Springs has sort of been stalled on their next village, and let's hope they can bring that online here pretty quickly. The multifamily permits in the city went up quite a bit here in the last year. They had a big hotel remodel here down by the river called River Roost. And then they've had a new apartment complex, about 80, 85 units out behind Home Depot that also were permitted this year. So that's going to help here in the coming year. Those are units that have gone live, not perhaps the apartments, but the motel remodel has gone live. They're starting to rent those. Those new apartments will go live very soon, and they'll start to impact the market.
Yes, and in regards to addressing workforce and attempting to secure and maintain or retain quality staff, Fort Lewis College recently created a fund of $1 million. The college put in $500,000. The Fort Lewis College Foundation put in $500,000. The $1 million there, they're contracting, I think, with the HomesFund to help them manage that for staff and faculty. So that's a nice step in the right direction. And in addition, as Bob said, the city did support the Best Western, which was on 160 West. It's not started yet. It's supposed to start soon, construction, remodeling, for that to be, again, smaller units that hopefully will be more attainable by some of our population. So we're seeing some programs that are getting a little more creative, which we certainly need to see.
Yeah. And all this time back now, for those that maybe can't, they're not ready to buy a home. There's some, they're at a different stage in their lives. Are rents still increasing, or are we starting to finally see those go down a little
Some
bit?
of the high end has softened a little bit. I think that's probably because some of those remote workers have gone back to work. But to be honest, the apartment rental vacancy rate remains very low. And I checked today, and I think it's probably lower than what I show on this chart. So the problem is, if they can't buy a house because for whatever reason, lack of affordability, lack of inventory, interest rates are too high, they're going to rent. And that's going to keep the rental market strong. And without significant more supply into that rental market, I don't see how those rates will change a whole lot, particularly on the low end. I don't see how anyone can compete with that low end, maybe $1,500, $1,600 and less. There's just not enough of it. And as John mentioned, the Best Western project out west of town, that's a LIHTC project is my understanding, which is low-income housing tax credit. And so those units will be income restricted based on 30 to 60% of the adjusted median income levels. So that will help a lot. I think there's about I think they said there's about 140 of them. I think that's what that number is. So that's going to have some impact, and that's going to help at that very low end.
Absolutely. Anything you want to add?
No, Bob, I think you explained it well. The whole reason the rental market is not going to see great reduction yet in what rents are, and occupancy is going to stay high is, we don't have a lot of inventory to sell to the buyers that are now considering being buyers. Interest rates, of course, are high. The prices are high. So we're seeing a little less flow from a renter to an owner than we have seen in the past. So they're going to have to keep stay as tenants for some period of time. So it's unfortunate we see that, but that's what we're up against. Now, a few apartment projects are approved and in planning, but that's not going to cure anything in 2023. I mean, there's a North Main project, probably will start construction at the end of the year. The 87 units Bob mentioned by Home Depot, when that finishes, that should help. So as we see some of the inventory come on in apartment buildings, that will probably see some rate adjustments overall across the community.
Yeah, it's hard to, if a project starts today and they start digging a hole today, you're not going to turn a key until next year at the best. So I don't see the supply situation overall changing significantly here in 23. I continue to believe that supply situation is going to remain tight through at least 23.
It's interesting, the Home Depot project, it's fascinating to me because they build off-site, bring in the I'm going to call, almost looks like, the building blocks, and then they assemble them there. So it's off-site, bring it in and put it up. It'll be interesting to see how fast they can do with the certificate of occupancy and open those up. Let's shift now to commercial construction. Is there anything happening right now?
Commercial construction has been slow, and it's been slow for several years. And that's my bailiwick. That's the world that I play in most. That's the world that I work in most. And from my perspective, it just hasn't been overbuilt. We saw an exodus in the local office market during the pandemic, but a lot of that space has been renting back up slowly but surely, and we just haven't overbuilt the local commercial market. In town, that retail vacancy is very low. It's down around 5, 6, 7%. That's very low. And the office vacancy, well, it's still probably higher than that. It's coming down, and people are renting space, and we're starting to see a little increase in people renting bigger spaces, 2, 3, 4, 5,000 square foot spaces, where we didn't see that for 2 or 3 years during the pandemic. So that commercial market remains pretty healthy from my perspective. It's going to be challenging to sell properties because of the increase in borrowing costs. The increase in capital means that those cap rates probably have to go up, and those sellers are going to be challenged to accept that reality for a while. So that may slow the commercial market down for a little bit.
Okay.
No, the office, exactly right. I mean, the pandemic, if there wasn't a very long lease, or people got out of or bought themselves out of leases, we saw a big vacancy occur. And of course, when Mercury went remote workers and the building became vacant, that was some anxiety in the marketplace, like, wow, 70,000 feet, what's going to happen? Of course, that being purchased and now being purchased by Access Health has, say, in a sense, taken that off the market, although I think they're going to recruit medical-oriented tenants to co-locate there, and be kind of a central health hub. But if that was vacant today, we would be working really hard to fill up 70,000 feet. Right. So in essence, that's probably a good thing, that that's not available per se on the market. But we are seeing office really firm up. It was tough 2 years ago, and the backfill now has really happened. And as Bob said, we've seen companies that started with a small space, and then they maybe grow into the 2,000 or 3,000 square foot spaces. They grow back into the business.
Go ahead.
And that's the same situation in the light industrial office warehouse product. You see the guy the company move into a 2,500 square foot space, and that business grows, and they need a 5,000 or a 10,000 square foot space. They're challenged to find a place to go. Back to the infrastructure story, there's no place for them to move, or limited places for them to move, where there's infrastructure where they can build a new building. So that's what keeps those commercial building permits in check, and that may be the case for at least another year.
Personally, I'm glad to see businesses, returning to the office space. I call it the water cooler talk, being able to get up and, go down the hall and talk to your, coworker and bounce ideas off each other. So, on a chamber and my personal perspective, I'm glad to see the return of that. I do not want to go back to the pandemic. None of us do. So are there any other significant factors you believe will play a role in the local real estate market?
Well, John brought up the situation between the division between public and private land. And La Plata County is largely public land and open space, about 61%. So that leaves you with 39% private ground. And I'll let John run with that, but there's only so much private land available, and it's getting chewed up.
Well, if you look at Bob's and my 40 years and your 41 years, 40 plus years in the area, we all recognize that development ground is typically what we'd all want to be if we're developers, to find the easier land in the right location, but the easier land to develop, which is more level, not wetlands, not steep grades, what have you. Well, you can certainly recognize that as that kind of property has been developed over a century, we don't have a lot left in La Plata County. As Bob says, I mean, when you're about 38% private land, and what private land is left, what can be done with that? Maybe some larger farms out on the Florida Mesa, but again, proximity to central utilities is an issue. So we have, again, they don't make land anymore issue in a big way. If you go to Texas, I mean, Texas is 95% private land. If you go to the east slope of Colorado, Denver, Colorado Springs, Fort Collins, and east, they have lots of private land that they can continue to develop. And that just isn't the case here. Another reason, for better or worse, that will keep values of real estate high, because there's just not enough of it.
Conversely, there's only 3% private land in Teton County in Wyoming. And we all understand a little bit about the values in Teton County and how that land is so restricted that those values continue to rise because lack of supply.
Absolutely. Okay, now is the time to get out the crystal ball and tell us, what you see in the real estate market on through the rest of 2023.
Sure, and for the most part, we probably touched on this through the program today. But let's just run through these quickly, because the viewers can certainly see them for themselves. But rental demand, I believe, will remain strong, residential demand, and it's just based on the lack of affordable inventory to be purchased, as we've just talked about, and high interest rates. Interest rates, we feel, are going to normalize towards the end of the year or the first quarter of 2024. Now, here's some perspective. Since 40 years, we talked about that. 7.38% is the annualized average for the last 40 years. And then if we look at 20 years, it's 4.53, which is less than the current rates, which are in the sixes. But in the context of what the consumer has to do, they are accepting this now. We saw a very slow November, December, and January, because interest rates went up so rapidly, and the inventory was thin, and we have a real winter, but it's really picked up in February and in March right now in regards to, and why? Well, the consumers said, this is not going to change. This is somewhat of a new normal, and they know that if the rates do go down 1% or more, they can go to their friendly lender, our sponsors, and say, let's refinance this home. So I wanted to cover that. We're seeing more creative financing. So what's creative financing? The seller is probably going to get more involved with paying some of the cost of the buyer, such as interest rate buy down. So there's interest rate buy downs. That's where you pay an upfront fee and you buy down the rate for a number of years, potentially. Typically not too many years. It's pretty expensive. Paying some of the closing costs that the seller traditionally hasn't paid, to take some of the burden off that buyer so they can still get into that home. So that is certainly one way to help buyers and sellers, a willing buyer and a willing seller, to get to terms. We will see less residential sales. I mean, Bob's talked about the inventory. I didn't check this morning, but if it's less than 12 that aren't under contract in city limits, that's at the height of our sales post-pandemic. That's the fewest we had in January. So that's a real threat. And think about it. Anybody that bought a home or refinanced their home in the last 3 years is really having to weigh, do I walk away from this 3.5% hypothetically interest rate on my home to buy another home across town or in the county or in town? So that's really holding up a lot of that inventory that could flow into our marketplace. So less residential sales, again, we've covered that. They can read that. Prices will stabilize for the year, however, because of the supply. Even with higher interest rates and higher prices of these homes, we're seeing this really pacing now back to what close to what we had last year. There's not going to be a housing crash. I mean, Bob talked about it. I mean, we all were here through the Great Recession. We had a lot more inventory. We had even higher interest rates at the time. They were going down, but they're higher at the time than they are now. And we had quite a bit of inventory, and our inventory in the MLS, we had probably 240 days on market.
Wow.
And now we're about 45 days on the market. So, you know, we just are in a position because supply demand, again, we're not going to see that crash. Plus, the lending practices are way better than they were before. We'll see the highest number of buyers coming from millennials and Gen Z, and this is statistically proven true, not just here, but across the nation. They've accumulated savings because they rented for a long time, but maybe they rented with roommates, maybe they stayed with family. They put some capital away, saved some money for a down payment, and they're buying later than our generation and a few other generations a bit younger than us, but they're buying now, and a lot of times that's in, in that age group, 30s. So they are flowing back in, as baby boomers are buying less because of their age. And for La Plata County, the record high prices, higher interest rates, cost of pre-K, inflation, these are all difficult things for our workforce. I mean, when a family has to pay $1,000 for childcare, for example, for one child a month, that's a pretty big impact to their household income. So that's what we're predicting for this year. And, at this time, I do want to share with you that as we wrap this up, well, first of all, thank Jack Llewellyn again for moderating. We sure appreciate you joining the team with Bob and I.
Pleasure.
Of course, we thank Bob for just 23 years of doing this. So, maybe you'll get a gold pin, a gold watch at 25 years. We'll do something there. But also, we want to thank the staff and brokers that helped on our committee to organize this, as well as Preston in doing the videoing. But, the thing that we want to share that we feel is exciting, and we got this from the community, this next year, we're going to do it live and virtually. We'll likely do that about this time of year at the ballroom at Fort Lewis College. So we look forward to having live audience again, and we like the interaction that occurs with that, with our brokers in the audience. So that's going to be wonderful. Again, this is a lot of information. We'll have it live on the website on the 15th all year long. However, any questions you have, just please contact any of our brokers. They're prepared and ready and willing and anxious to visit with you about this year's forecast, any information or data that may assist you in your business in any way. That's what we're here for. So we really look forward to having you contact our brokers for more details. And lastly, and most importantly, let's thank our sponsors again. Alpine Bank, Animas Mountain Mortgage, Bank Central, the Malone team, Bank of Colorado, Bank of the San Juans, Mountain to Desert Mortgage, TBK Bank, Draper and Kramer Mortgage, the Norm Phillips team. Thanks again to our sponsors. And thanks mostly to the viewers for this year's forecast.
And thanks to the Wells Group, thanks to John Wells and his team for putting this on every year. It's a great service to the community.
Well, and I just, and echoing what you guys said, the hours and hours and the research that you do and everything you do for the community above and beyond just this, but also all of your brokers that are out in the community contributing, to the economy, coaching, all of the things. You guys do a great job. I appreciate you. So thank you.
Thank you, Jack.